Hey guys, welcome back tonight. I hope you had a really great day trading today. So before we review today's price action, please make sure that you are subscribed to my TradingView. Last night I was able to make a video about what happened during the day, but then I didn't make a second video with the trading ranges for the next day, but I did post them up on TradingView. So head over to TradingView. My name over there is the same as my channel over here with underscores, and then you could see right here we have DIA, IWM, QQQ, SPY, and SPX already. And if you click through to them, you get the chart right here that you can click around on. And then underneath, I do have the commentary, and this is pretty much what I would have said in the video anyway, all written out. So make sure you read that. And that is just in case I don't get a chance to make a video like last night. So you did have access to the actual trading ranges. I just didn't get a chance to make it into a video. So hop over there, make sure you subscribe. It doesn't cost anything to have a TradingView account. All right, so back to SPY. So we did open SPY with a gap up all the way to the top of the implied move, which was at 530. That was a 1.4% move to open the day. And that took us above the 35 EMA right here and right to the 4-hour 200 moving average. So the 4-hour 200 moving average was pretty much lined right up with the top of the implied move, and then right above that we had this bear gap that was left over from the part that we closed out yesterday. So that was Monday's down gap and then this little up gap from some time ago. So we got into this bear gap, that 4-hour 200 moving average. We really tried to hold that level, trapped around there for a while, and then we dropped. We closed the morning gap right here, and then we dropped into the red, and we did close red on the day. And this dashed line, I'm curious what that is. Where does that take us? Let's zoom out to the 1-hour time frame. So we closed today basically right at this support level that goes back to May 31st. So we did start with a big up day and then off the top, so basically it was 1.4% up, but once we got to the top of the implied move, a little bit above it, from top to bottom, we had a 2.33% move today. Pretty impressive. That is a pretty normal move for having VIX at 27. SPY did close down 0.67%. VIX closed up 0.51%, and we did trade completely within the implied move. We actually got out a little bit here, but we did at least close within the implied move completely. And we did close just short of this up gap from yesterday. That's Tuesday's up gap, and we closed right above that. So where we opened Tuesday to where we closed today, completely flat. And in SPX, we see the same thing. We did open with a gap up all the way to the top of the implied move. The top of the implied move was at 53.10 today, and we started the day up at that level. The 4-hour 200 moving average was also right there at the top of the implied move. We also had the bear gap up here. This is the down gap from Monday, and we filled a little bit of it yesterday, and today we gapped pretty much into it, got pushed right out. We did chop around that level a little bit before getting pushed out. Then we fell underneath the 35 EMA, and then we dropped deep into the red, and we did close right above this bull gap from Tuesday. So Monday going into Tuesday, we gapped up and filled most of it but left a little bit open, and from Tuesday morning to Wednesday close, completely flat. And we are, again, still just a little bit above the weekly 35 EMA. That is an absolutely critical level. And we are back down there after that bounce off on Monday. SPX did close down 0.77%. VIX up 0.5%, and we did close within the implied move today. And then taking it over to QQQ, we did open over here with a gap up also all the way to the top of the implied move. And we did fill that gap from Monday's gap down completely, and the top of the gap immediately turned into a resistance. We could not get above that gap at all, and we got pushed back down underneath the 35 EMA, back underneath the weekly 35 EMA. That's a big level, and we did close red, down 1.08%. VXN also closed down 0.62%. So volatility is contracting in the NASDAQ. We're still up near 30, so 29 for volatility, and we almost completely stayed within the implied move today. The top of the implied move was at 448, and you could see only wicks got above that, just enough to fill that gap from Monday, and then we got pushed back out. So we almost completely traded within the implied move today. So again, here, if you did sell any spreads with any of these strikes at all, whether you were playing it safe up here or right at the top of the implied move, you did close today with 100% profit. And we also did close above the 200-day moving average. That is big, even though we lost the 35 EMA on the weekly time frame. We did close above this 200-day moving average. That is still pointing upward. This does have the ability to, even if we do see lower in the near future, to at least slow us down here. We might chop around that 200-day moving average. It is a really big level, and it is still pointing up. So that was QQQ. Switching it over to IWM. In IWM, we did open with a gap up, and we gapped up to the 50-day moving average. We didn't get above it. We saw rejection there right away, and that was also where we have this bear gap from Monday. We still have a bit of that open above the 50-day moving average, but we pushed into it just a little bit, tried to get above the 50-day moving average, and rejected. So that opening candle here was the high of the day. We lost it. We came underneath the 35 EMA, down to the 4-hour 200 moving average, tried to hold on that 4-hour 200 moving average, but did end up losing it, and we dropped all the way down to the 35 EMA on the weekly time frame. So from the 50-day moving average, we stair-stepped down 4-hour 200 moving average, and then 35 EMA on the weekly. So every level on our chart got hit today, and we did close literally right at that 35 EMA on the weekly time frame. IWM did close down 1.18%. The Russell Volatility Index up 0.66%, so we are just under 34 for volatility in small caps, and we stayed completely within the implied move here today. And then lastly, let's take it over to DIA. And in DIA, we also opened with a gap up, and let me just get centered here. We opened with a gap up to the 50-day moving average. Here again, we did not get over that 50-day moving average, and we also right above that 50-day moving average had the rest of this bear gap from Monday. So that big gap down we had on Monday. Tuesday we filled a part of it. Today we got right underneath that 50-day moving average with that leftover gap above us, and that was just too much resistance. We got pulled back down underneath the 35 EMA, back underneath the 4-hour 200 moving average, and down to this dashed line right here, which if I zoom it out a little bit on the year, that was our uptrend support. It looks really messy on this time frame, but trying to look past the noise, it is this green line right here, uptrend support. We closed literally right on that line. So we also did close right above the weekly 35 EMA. That is the line that we're trying to hold in all of the other indexes here, and in DIA we are above that level right now. And also the 200-day moving average is down here, still pointing up, and definitely has the possibility to offer some support if we do keep selling off. So just know the 200-day moving average is not too far away. Actually, let's just measure it out really fast. It is about 1.6% away. So DIA did close down 0.56%, and from top to bottom, so just underneath that 50-day moving average to where we closed today, was down 1.9%. and we did stay completely within our trading range today here. So looks like volatility is back in full force, and I, for one, am happy to see that. And that was a recap of today. Let's go and check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, and yes, I'm putting them in this video, I'm not splitting it off into another video. That turned out not to work very well. So before we head into those trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. I will always get back to you, and there's no such thing as a dumb question. So if you don't understand something that I'm saying, leave me a comment. And don't forget about that thank you button. It's a really easy way to show appreciation for all the work I do to put these trading ranges together for you. This is literally a full-time job getting these videos out to you. I spend 30 to 40 hours a week on these videos, so easy way to say thanks is hit that thank you button. All right, so starting in SPY, tomorrow's implied move is between 510 and 527, and that is from options. And the 30-day average volatility actually lines right up with the trading range for Friday. With Friday's implied move is 507 to 530. That is also the 30-day average volatility. So for tomorrow's contract, we're looking at a 1.5% move and a 2% move on Friday's contract implied. So to the upside, the very first level to look for is going to be the 35 EMA. The 35 EMA is a big resistance level in a downtrend, and in an uptrend it is support. So right now we are seeing that level as resistance. On Tuesday we came up over it and then hit that top of the implied move, dropped underneath the 35 EMA. This morning we gapped over it, hit this bear gap, and then we got back underneath the 35 EMA. So that 35 EMA is near the top of the implied move right now, pointing down across through the top of the implied move. And then if we get above that, the top of the implied move is 527 and 530 on Friday's contract. Above the trading range for the next 2 days, we have the 4-hour 200 moving average right at the top there, and then just outside of it we have the rest of this bear gap. This was Monday's down gap right here. On Monday, we dropped down really far. We came back and we filled that gap about halfway before getting pushed out. Then Tuesday, small gap up and then push into that gap a little bit and then came back out. Today, we gapped right into that gap and got pushed back out. So that gap is just outside of the next 2 days trading range. To the downside, we have the 1 week 35 EMA. I'll zoom out to the 1 week time frame in just a second. If we drop underneath that, we have seen that as a support so far, and it is a really big level, and it is pointing slightly up. So I'm not saying we can't drop underneath it, but personally I feel like we might stay around this level for a little bit and test it because it is such a big level. But if we get underneath it, the bottom of the implied move is 510. Then we have this gap right here, and I did not look before I pressed record to see where that is. Let me zoom out to a bigger time frame. Is that this one right here? So that gap goes back to when we had that drawdown in April. So we pulled back and then we started showing signs of higher lows, higher highs, and then we gapped up right here. So let's measure out that gap. That is about a $3.50 gap. So it's not huge, but it is here underneath our trading range for tomorrow. And then let me take it back really quickly. This right here is the 200-day moving average. So let's look at that on the daily time frame. So right under here, we do have the 200-day moving average, And you can see that we definitely still have room momentum-wise to hit that level. The 200-day moving average is not out of the question right here. In fact, we are overdue to hit it. Do I think we're going to hit it this week? No, not really. And don't laugh, because every time I say something like that, we actually do end up hitting it. It is possible, and it is underneath our trading range for the next 2 days. So that is SPY. Let me take it back and see if I missed anything. Do you guys see anything? Maybe this could be considered a support right here. We bounced in that gap, so that does actually line up with almost with that 510. If you're counting the wick, then that 510 bottom of the implied move could be considered a support. And then 507 is the bottom of the implied move for Friday's contract. And you could see how close that is getting to that 200-day moving average right here. And then switching it over to SPX. The implied move in SPX tomorrow is between 51.15 and 52.80, and that is from options. And the 30-day average volatility also lines up with Friday's implied move, which is 50.85 to 53.10. And to the upside, we do have that 35 EMA. Always know where your 35 EMA is tomorrow. It is to the upside. And if we get above this level, maybe turn it into a support, then the top of the implied move is at 52.80. 53.10 is the top of the implied move on Friday's contract. And then we have this bear gap that we opened at the very beginning of the week, at the very start of the week. Then we actually gapped way down to the weekly 35 EMA here to start the week, but then we came back up with a pretty big bounce to fill this gap about halfway before getting pushed out. And then we bounced here again, gapped up Tuesday, took it a little further into the gap here, got pushed out. Today we gapped up into the gap, which was right at that 4-hour 200 moving average level, but we pushed a little bit further into that gap. And it looks like I didn't quite adjust it over here, so we filled it about halfway from what we had left at the start of the day, and then we got pushed back out. So right above the trading range for the next 2 days, we do have that 4-hour 200 moving average and that bear gap. And then to the downside, we do have this up gap from Tuesday. We opened Tuesday with a little gap up, and then we filled it about halfway, and then we took off. So that is right there, just underneath where we closed. And then weekly 35 EMA right here. I said for SPY that I was going to zoom out to that time frame, but I didn't. So I'm going to do that for SPX here in just a second. And then where we dropped down to on Monday, we could use that as a support level that actually lines right up with 51.15, which is the bottom of the implied move. Bottom of the implied move for Friday, 50.85. You could see that 200-day moving average just underneath us. And then we also have that gap that went back to April. And let's go take a look at that really fast. That's right here. And that was right when we saw those April lows. And then we made higher highs, higher lows. I could not get that out. So made a series of higher lows, and then we gapped up. And that is the gap that is at the bottom of our implied moves for the next 2 days here. So you can see right there. And then that 200-day moving average right here. So doesn't seem like a terribly complicated trading range for tomorrow. It just depends on which way momentum takes us. We do have oversold signals on a couple of time frames, and right now it looks like we're bouncing between that 35 EMA on the weekly time frame. Don't let me forget to go to that time frame right here, and then the 4-hour 200 moving average. So if we even take that out just a little bit further, you could see like this might be a decent place to see a bear flag between these two levels. So that is SPX. Let me know in the comments if you see anything else. And then taking it over to QQQ. Okay, wait, before taking it to QQQ, back to SPX, I didn't take it to that 5-year weekly time frame here. So we are right here sitting right on top of the 35 EMA on the weekly time frame, and if we zoom in, that has a nasty wick on it. Look at that. The body of the candle on the week is right here sitting on that weekly 35 EMA, and that wick is all the way up to this bear gap right here. So very interesting. Momentum definitely has shifted to bearish here. If we get underneath this 35 EMA on the weekly time frame, it will either be an excellent buying opportunity like seen here, as you can see right here, or it'll be something like this, where red candle right here, we actually bounced for 2 weeks here, and then we started a much bigger downtrend. And that downtrend ultimately ended us back at the 200-week moving average. Good, I did get to that time frame. All right, switching back to the 30-minute time frame and now taking it to QQQ. So the implied move in QQQ for tomorrow is, let me get zoomed in here. All right, 426 to 434, that is from options. And the 30-day average volatility, 418 to 452. The implied move on Friday's contract, 423 to 447. And you could see that the implied move for the next 2 days has contracted. VXN did actually close down today, so this very well could be a place that we slow down. And looking at the way the moving averages are set up, the momentum on the 30-minute time frame and 1 hour time frame are still down, but we are here between the 200-day moving average and the 4-hour 200 moving average, and we're trading in a channel in that zone there. So this could definitely be a place to bear flag. I am bearish, so I do think that the probability of seeing a bear flag and then a deeper move down is what I'm thinking, but I'm also a day trader, so just keeping an eye on the chart and making the best call as it comes. But this right here, 200-day moving average, 4-hour 200 moving average, could definitely be a place to bear flag. And of course we have that 35 EMA on the weekly time frame as well, and we are chopping right around that. All right, so let's look at it level by level. To the upside, the first level to look for is gonna be that 35 EMA on the weekly time frame, and that very well might be paired with that 35 EMA on the 30-minute time frame. So 235 EMAs, that is powerful. And if we do get above that, we have this 434 is the top of the implied move, but it also coincides with that support right here. So this support, so if we get back above that and reclaim that 444 level, that is definitely possible. So that is that dashed line, and then above that we do have 447, that is the top of the implied move for Friday, and then just above that where we saw resistance today, that is where we close that bear gap from Monday, and that is, let's call it 449. It's a little bit underneath that. And then just outside of the next 2 days trading range, we have the 4-hour 200 moving average, the 30-minute 200 moving average with that steep downward momentum. It is also pretty far away, and we do return to the 30-minute 200 moving average really often. We don't stay away we don't stay away from it for too long, even in a downtrend, and you could see that clearly right here. Even though we were in a downtrend, we came back to the 30-minute 200 moving average. So we are pretty far away, so we definitely could swing back up. Maybe this right here, the 4-hour with the 30-minute, that could be a good target within this bear gap. Okay, so that is the upside. Just underneath us, we have the 200-day moving average. Personally, I think we might stay around this level for a little bit. It is just underneath where we closed. 426 is the bottom of the implied move for tomorrow. 423 is the bottom on Friday's contract. And then what is this right here? This dashed line is a support somewhere. Let's go take a look. All right, so that is... Okay, so it goes back to right before the NVIDIA up gap, and then when we came back down and dropped, we did get under it, but we did reclaim it pretty quickly. So we reclaimed this level that is 422, and that is right underneath our implied move for the next 2 days, within the 30-day average volatility, but just outside of the implied move. So that is QQQ, and taking it over to IWM. So the implied move in IWM is between 197 and 207, and that is from options. And the 30-day average volatility is $2 wider in each direction, 195 to 209, and the implied move on Friday's contract is between 196 and 208. And to the upside, well, let's just start with right in the middle, because this 35 EMA is exactly where we closed. So that is a major 35 EMA. Go check that out on the weekly time frame, and if we break that, that is definitely a problem. And then to the upside, we have the 35 EMA on this time frame. This is a 30-minute time frame, and also that 4-hour 200 moving average. The 4-hour 200 moving average is absolutely flat. And it is flat because we did see a major rally here, but it was very short-lived. So it didn't even give this 4-hour 200 moving average any time to gain momentum. So the momentum is flat here. Above that, we have the 50-day moving average. It's relatively flat for the exact same reason. And it is just outside of the next 2 days implied move. You could see today that was a very clear resistance, the 50-day moving average. We didn't even touch it. We just got near it and we got pushed back down to the weekly 35 EMA. So the top of the implied move for tomorrow's contract, 207, 208 on Friday's contract, and then to the downside, if we do break this 35 EMA on the weekly time frame, then we are probably just going to drop straight to 197. That is right at the 1-day 200 moving average. The momentum here is still up, and this has been a very slow, steady moving average that doesn't shift around a lot, but over time, we have found support on the 1-day 200 moving average, or the 200-day moving average. Same thing, sometimes I just say it differently. 197, bottom of the implied move, 196 on Friday's contract, and if we break the 200-day moving average, the next true support is down here, and I do have to zoom out and see what that leads to. That is right here. So after we got pushed down in March, from the 211 level, we got a very sharp rejection down to this support level at 191. And I just want to measure how big that drop was in March. So that was 9%, not bad. That's a pretty big drop. So that support 191 is still pretty far outside of the trading range for tomorrow. I would definitely not expect to see that this week, but you never know, and just know it's there. So that is IWM and DIA. We do have it's not the implied move over here, it's the 30-day average volatility, and it is between 394 to 394, so $10 trading range. And to the upside, the first level to look for is going to be the 4-hour 200 moving average, and also the 35 EMA. I didn't add that. I didn't shift it over yet, but let's put that in right here. So 35 EMA is right now basically right at the same level as the 4-hour 200 moving average. So right here and right here. I'll get rid of this other one in just a minute. It's kind of underneath all of these layers, so I'm not going to deal with it right now, but that is nothing. That was just an extension that I didn't adjust yet. So top of the trading range, 394. Just outside of that, we have the 50-day moving average, and you could see that we did gap down underneath the 50-day moving average, underneath the 4-hour 200 moving average, down to the 35 EMA on the weekly time frame. And then when we came back up, we saw a very clear resistance at that 50-day moving average. So that is just outside of our trading range for tomorrow. Today we closed just outside of the implied move on the week, and then to the downside, 35 EMA on the weekly time frame. So far, the last 2 times we saw it, and that was this week, we did bounce there. And then underneath all of that is the 200-day moving average. Now, if we hit that 200-day moving average, I would consider that an extremely healthy pullback. So there you have it, guys. Every level in every trading range in all the indices that you need to know for tomorrow. If you see something I missed, please let me know in the comments. If you have any questions, please ask, and have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow.